Regional stability and rapid economic progress in the Association of Southeast Asian Nations have continuously improved the lives of its people. Today, ASEAN is the seventh largest economy in the world with a combined $2.6 trillion in GDP. With a population of 622 million, ASEAN is the third largest market. But this growth comes with risks. With climate change affecting the frequency and intensity of extreme weather events, the constant threat to people's lives, well-being, and future are frequent and most often devastating. Understanding disasters and how they can impact can equip us to build disaster-resilient communities of the future. Disaster risk financing and insurance helps countries ensure that their people are equipped and financially protected in the event of disaster. The ASEAN region is considered as one of the most hazard and disaster-prone areas in the world. Various natural hazards impact the region, putting a significant number of people and cities in high risk. Disasters are taking hundreds of thousands of lives and $1.5 trillion lost in the last decade. Economic losses are averaging from $250 billion to $300 billion each year from disasters. In 2015, 160 disasters were reported in the Asia-Pacific region, with 16,046 deaths and $45.1 billion total cost of economic damage. Over 59.3 million people affected by disasters. Out of the reported disasters, earthquakes has the highest number of fatalities. Floods were the most frequent disaster, while floods and storms were the most costly when it comes to economic damage. Post-disaster needs assessment of the 2009 West Sumatra earthquake pegged the financial requirements for early to medium-term recovery at $343.6 million. For the 2013 Typhoon Haiyan in the Philippines, recovery funding needs for the period 2014-2016 were assessed at $3.9 billion. While in Myanmar, the 2015 Cyclone Comment preliminary assessment estimated recovery and reconstruction needs in the order of $1.5 billion. Annual average losses due to disasters can reach as high as $4.6 billion. The financial losses continue to rise, and ASEAN member states experience significant impacts. Natural disasters cause significant fiscal risk to governments and create major instability in economies. The vulnerable groups in the population is most prone to greatest risks, especially caused by major disasters. Even countries with strong disaster risk management programs are still highly exposed to the economic shocks of disasters. Countries should then ensure that their populations are financially protected and that their communities become resilient in the event of a disaster. Risk transfer strategies help countries increase their financial capacity to respond to the impacts of disasters by shifting the burden of financial loss or responsibility for risk financing to another party. This is done through insurance, reinsurance, legislation, or other means. Financial protection through insurance, for example, can help governments mobilize resources immediately after disaster strike, as well as provide a buffer for long-term impacts. ASEAN recognizes the need to build better and make communities resilient that can collectively respond to disasters in the region. Hence, it has to increase the capacities of its member states to analyze and develop policies, reform its existing policies, and provide an environment where ex-ante financing instruments and risk transfer are utilized to help build resilient communities that deal with the impacts of disasters. As a response to the need for enhancing its member states' capacity to give support not only during and after disasters, but more so during post-recovery, ASEAN has established a regional program on disaster risk financing and insurance to help strengthen disaster resilience in the region. The ASEAN Disaster Risk Financing and Insurance Program is ASEAN's platform to enhance capacities and cooperation in risk financing, risk transfer, and other social protection schemes that will increase its member states' financial response capacity to address post-disaster funding needs. Based on its mandate from the ASEAN Roadmap for Disaster Risk Financing and Insurance and the ASEAN Agreement on Disaster Management and Emergency Response, the ASEAN DRFI Programme has 3 objectives: enhance financial resilience of ASEAN, strengthen capacities to effectively manage the impacts of disasters, promote regional cooperation for a resilient and sustainable ASEAN community. Overall, the ASEAN DRFI Programme's goal is to emphasize the importance of DRFI strategies in implementing a broader disaster risk management agenda in the region. The ASEAN DRFI Programme has 3 main components in the regional and national levels to support member states. Component 1: Risk Information, Assessment, and Modeling. Establish a regional damage and loss database to better understand risks. Develop risk assessments and risk models as basis for risk financing strategies. Component 2: Public Policy Development in DRFI. Review policies, strategies, and programs at national and regional levels. Promote policy reforms and regulatory frameworks that support DRFI. Component 3: Knowledge Management in DRFI. Assess knowledge and capacity of governments in DRFI to increase the level of awareness and understanding in order to make informed and sound decisions. We know we cannot completely prevent disasters from happening, but we can mitigate the impacts of disasters. By learning about risks, we can bring people together, a community that understands and knows about disasters and their impacts. By investing in disaster risk management, the ASEAN community can build better lives for its people. With DRFI, the ASEAN community is investing in a disaster-resilient future.